Singaporean fixed and mobile operator StarHub saw first-quarter net earnings dropping 15% year-on-year amid a slump in mobile and pay TV revenues, as well as a decline in equipment sales, which was only partially offset by stronger enterprise fixed-service revenue. For the quarter ending the 31st of March 2018, the telco booked total revenue of 561 million Singapore dollars, down by 4.7% from 589 million Singapore dollars in 1Q17, while service revenue was 1.4% lower at 450.8 million Singapore dollars. Group EBITDA decreased 4.8% YoY to 152.2 million Singapore dollars and service EBITDA dipped 3.7% to 144.5 million Singapore dollars, resulting in a slightly lower service EBITDA margin at 32.1% versus 32.8% a year ago. First quarter net profit plunged by 13.1% to 62.8 million Singapore dollars from 72 million Singapore dollars in the corresponding year-ago quarter, with StarHub conceding that falling turnover due to intense competition in the domestic consumer market segments took a chunk out of its bottom line. More encouragingly, the operator's enterprise fixed revenue improved 18% YoY to 117.5 million Singapore dollars, buoyed by higher revenue from data. StarHub called the enterprise fixed segment a constant bright spot, with the third successive quarter of double-digit revenue growth. In terms of total revenue mix, mobile, pay TV, broadband, enterprise fixed services, and sales of equipment contributed 36.6%, 14.4%, 8.5%, 21% and 19.6% respectively, it said. Mobile revenue, still the group's single largest source of income, stood at 205.1 million Singapore dollars in 1Q18, 7.1% lower when compared to the same period a year ago, as the total user base decreased by a net 8,000 YoY to 2.283 million. Within this figure, StarHub noted that the prepaid base increased by a net 20,000, but postpaid customers fell 27,000 mainly due to the one-time termination of 23,000 inactive legacy data-only lines in 3Q17. Comparing to a year ago, StarHub said that both prepaid and postpaid ARPUs had decreased by 2 Singapore dollars to 13 Singapore dollars and 43 Singapore dollars per month respectively. Broadband revenue, meanwhile, was slightly higher at 47.5 million Singapore dollars compared to 47.2 million Singapore dollars a year ago, attributed mainly to an increased mix of customers signed up to its higher-speed fibre plans. Broadband monthly ARPU remained stable at 33 Singapore dollars, although the residential broadband customer base decreased by 1,000 to 469,000 households. Finally, pay TV revenue was 10% lower YoY at 80.7 million Singapore dollars due to a 38,000 drop in customer base to 449,000 households. Going forward, StarHub anticipates its FY 2018 service revenue to be between 1% and 3% lower than in 2017, while the service EBITDA margin is expected to be between 27% to 29%. Further, in 2018 StarHub said that it also anticipates competition to intensify in the mobile business, in part due to the impending arrival of a fourth player in the shape of Australia's TPG Telecom in 2H18. To counter this threat, StarHub will continue to roll out new robotics, digital platforms and cybersecurity solutions to support Singapore's Smart Nation vision. It is also developing an MVNO strategy. Yesterday, the 3rd of May, the telco announced the signing of a deal under which fibre broadband provider MyRepublic, Singapore, will lease network capacity from StarHub to offer consumer mobile services. Commenting on the deal, StarHub Chief Marketing Officer Howie Lau said, "With this partnership comes the ability for us to offer customers more choices, better address customer segment needs and grow our mobile business amid the evolving landscape."